What is an IRS Notice CP3219A, Statutory Notice of Deficiency? It is also commonly known as a 90-day letter. That means the IRS is proposing to increase your tax and is giving you 90 days to challenge it in tax court before the tax is assessed. Hi, I'm Dave Horwedel, CEO of Torchlight Tax. See our video, What is Tax Court, on the Torchlight Tax YouTube channel for more data on how to utilize your tax court rights. This notice often comes after the IRS believes there was income missing from your tax return, a deduction was disallowed, a credit was denied, or information reported to the IRS does not match what was reported on your return. For example, the IRS may have received a W-2, 1099, brokerage statement, cancellation of debt form, or other tax document that does not appear to match what was reported on your return. But here's the critical point. A CP3219A gives you the right to file a petition with the United States Tax Court without first paying the tax. In most cases, you have 90 days from the date of the notice to file that tax court petition. If the notice is addressed to someone outside the United States, the deadline becomes 150 days. Calling the IRS does not extend the deadline. Sending documents to the IRS does not automatically extend the deadline. Trying to negotiate with the IRS does not extend the deadline. Waiting for the IRS to review your paperwork does not necessarily protect your tax court rights. So, what should you do if you receive this notice? First, you should decide if you want to handle it yourself or get professional assistance. Also, you should be aware that most tax professionals do not know how to utilize tax court, as they have no one in the firm with the required credentials and expertise. Only 1 in 5,000 tax preparers is qualified to represent you in tax court. If you want professional assistance, contact Torchlight Tax for a free consultation at 877-758-7797 or info@torchlighttax.com. If you want to handle it yourself or have an understanding as to what the professional needs to do, here are the steps. First, look at the deadline immediately. Second, compare the notice to your tax return. Look at the year involved, the income items, the deductions, the credits, the penalties, and the explanation of changes. You need to know exactly what the IRS is changing and why. Third, gather your records. This may include your tax return, W-2s, 1099s, bank statements, brokerage statements, business records, receipts, mileage logs, loan documents, amended forms, corrected tax forms, or anything else that supports your position. Fourth, determine whether the IRS information is wrong, incomplete, or misunderstood. Sometimes the IRS has the wrong information. Sometimes income was reported twice. Sometimes the taxpayer reported the income, but under a different line or schedule. Sometimes the IRS disallows expenses because the documentation was never provided. Fifth, respond to the IRS if you can resolve the issue quickly, but do not ignore the tax court deadline. This is where many taxpayers make a serious mistake. They send documents to the IRS and assume that means the case is protected. It may not be. If the deadline is getting close, you may need to file a tax court petition to preserve your rights, even if you are still trying to work things out with the IRS. Sixth, do not sign the agreement form unless you truly agree with the proposed tax. If you agree, the notice will usually explain how to sign the waiver and pay or make payment arrangements. But if you do not agree, signing the agreement may give up important rights. Seventh, if you file a tax court petition, understand that this does not necessarily mean you are going to trial. Many tax court cases are resolved with the IRS Appeals Office or IRS counsel before trial. Filing the petition can preserve your right to dispute the proposed tax before it becomes final. If you miss the deadline, the IRS can assess the tax, add penalties and interest, and eventually move toward collection action. At that point, your options may become more limited, more expensive, and more difficult. The biggest mistake taxpayers make is thinking they can deal with this later. This notice can be your opportunity to dispute the IRS before paying the tax, but only if you respond properly and on time. One other key point, as discussed in more detail in our video What is Tax Court, is that petitioning tax court levels the playing field. IRS counsel does not want to face a federal judge based on an arbitrary or incorrect IRS assessment. Petitioning tax court makes it clear that you know your rights and are not someone who can be pushed around. Contact Torchlight Tax for a free consultation at 877-758-7797 or info@torchlighttax.com. If you found this video helpful, please like it, share it, or subscribe to our YouTube channel. Thanks for watching.